Welcome to Learn Accounting Podcast by me, Professor Accounting, Episode 5, Bank Reconciliation, Importance of. Just a quick reminder of the reconciliation layout. Just try and test yourself as you go through this. You look at the screen, try and think about what's the order of play, mainly applicable for AQA. Starting off with a balance as per a cash book. Then we're adding, is it unpresented checks or outstanding lodgements? It's unpresented checks. Deducting uncredited lodgements or outstanding lodgements, and that gives you the balance as per the bank statement. Values to the right will be applicable to the question, obviously using what's needed. Just pay attention to the layout. It is obviously a document, so they want headings, pound signs. Making use of parentheses, brackets for negative numbers is usually notation, and obviously the lines to show the summing or calculations. Okay, so just a reminder there of the layout. Let's look at the importance of preparing bank reconciliation statements. So I suppose benefits to the business as well. This could be under that heading as well. So start off with the first one. We've got missing entries in the cash book can be highlighted. So anything missing that should be in the cash book to keep the accounts correct and accurate needs obviously to be first highlighted and then corrected. Linked to that is errors. So errors in the cash book can be corrected. So not necessarily the same thing as number one. Something missing, although it is an error. Number two is specifically looking at things that have been entered, but maybe entered it by mistake or incorrect values, maybe or different names applicable to debtors or creditors and so on. So these two factors obviously link together, and obviously the importance of this would be it's in this case it's preventing something. It's preventing errors in the financial statements, and we can't have errors in the financial statements. Again, there's reasons for that. Typically, obviously, you're misleading investors, you're misleading stakeholders, and obviously it's not abiding by accounting standards. And I suppose overall it's errors, so it's mistakes. So it needs to be corrected to avoid misleading and to have accurate information. Number three, we can find out out-of-date checks and cancelled checks in the cash book. So this relates to dishonored checks in some way. Obviously this needs to be, we need to be aware of any checks that have been cancelled for whatever reason, whether they're lost in the post and cancelled, or whether we have any particular dishonest buyers who are making payment, but actually the payment is not received. Checks can last for 6 months from the date of being signed by the person sending money, so any checks that have got an incorrect date on may go out of date quite soon, so that's obviously another factor. Linked to that, obviously, if any checks have been cancelled or out of date, it's avoiding fraud, and that be from external parties or even internal parties, employees, for example, as bank statements can act as an independent check to the cash book. Nice statement there that exam boards, especially AQA, do like to hear. The role of the bank in this case, they're an independent checker. So they're independent, they're not actually connected to your business, and they are providing reporting information about your bank account, which you can use as an independent check to verify what your records state. And lastly, errors on the bank statement can be investigated. So any error that you maybe find when you receive your bank statement from the bank, you can look at that and raise any issues with the bank themselves, notify them obviously to make some amendments or corrections if that is the case. That links obviously to fraud. Maybe there's some anomalies in terms of transactions that maybe shouldn't be there, or rather than general errors, typically the bank, they do report transactions that have occurred, but if there are some transactions there that you object to in terms of you didn't make payments for certain items, then obviously you need to notify the bank for those to be corrected, investigated and corrected. So that's the importance of preparing bank reconciliation statements. Well, again, my contact details there. I want to thank you for stopping by, and I'll see you again for another podcast from Professor Accounting.